What's going on, everybody? Welcome to another video here from the Nomad Hedge. In today's video, we're going to take a look at the major indices, and we're going to ask this question: if the markets have sort of like found a bottom at these current levels. Okay, so we're going to take a look at the SPY here on we're right on the monthly chart, so we're going to take a look at the daily chart here. And as you can see, we all saw that this was a reaction here from this fib 0.618 ratio. And now we thought first that the market was going to test this value area low, although we did see this level here as potential support, and that's where the market reacted to. Now if we pull forward the moving averages, we can see here that we closed above the 233 EMA. This is a key level to watch. So if we're above this level, it's a very bullish sign. Now, this session here is pretty important as well. Now, if we take a look at SPY here on let's take a look at this thing on a 30-minute chart. So, if we go back here, this was the Friday session. Now, we saw an impulse here, and this right here, this was the correction. So, we saw a flat correction here. We had a shakeout, taking out these stop loss levels here, and the market reacted strongly from this level. Now we're going to watch this level here, and so if we move on to let's go back or go into a 5-minute chart. So if you look at the session here, now this was a basic reaction here, closing into this open gap that we had here. So this is the 0.618 that we looked at earlier. And so we do have an impulse here. This is a leading diagonal. So what we think is going to happen next on is that this gap here, this is what we call a fair value gap. I think that the market is going to push forward higher here, close this gap here, and then we're likely going to test this level here. We could also potentially test this POC line here before resuming higher. So this is actually a pretty good risk reward setup here, because this is your stop right there. And we want to see the market bounce from this level. Now we do have early signs that that's exactly what's going to happen. Why? Because we have the first bounce here from the 0.618. We closed above this POC line, and we're also above this 233 EMA. Let's also not forget that we do have a clear MACD buy signal here, and we're reacting from these very oversold conditions here. So every time the market sort of like finds very oversold conditions, we see very strong reactions, right? And so when we look at this correction here, this is what we call an ABC pattern here. Or yeah, I mean, this is the impulse, this is the corrective up. Now we broke above the previous high here, but we see that this move here is impulsive. Okay, now one could make the case that this is an ABC, but this essentially becomes an A either way. So another thing to think about this market is that we've pretty much gone nowhere. I mean, if you go back here in time, in my view, the way I look at this correction is that the correction started right here. This was back in August of 2024. Basically, the market has done nothing ever since we reacted from this level here. And so it's important that we tested and close above the 233. Why? Because last time we were at this level was back here in October of 2023. So the market has tested this level, and it has proven that it can get above it as well. So when I look at this entire move here, the correction started right here. Okay, and this has sort of like been an upside move along with negative divergence. So the market is warning us of impending or continuing downside moves. So when we look at the market from here all the way till we are today in March, end of March, I would say in 2025, we've gone nowhere. So sellers at this point must have been very exhausted. Okay, so a lot of stocks have dropped more than 20%. A lot of stocks are in bear market. If you look at the sectors, many of them have gone below this 10 to 15% threshold, what we call a correction. And so this 10% of move down here has caused a lot of selling across many stocks. So we're seeing a bottoming process happening across the board. Now this is the S&P 500. We're going to take a look at the Qs. Now the Q is looking a little bit different here. It's looking bearish in comparison to the SPY, because we are below this POC line. We're also below the 233 EMA. Now what's important though is that we had a reaction here, right at this golden ratio, and the market closed above this level here. So it's trying to get above this POC line, and if it does so with a confirmation of the Qs, we want to be buyers of this market, and we think we are going to likely break out to new highs here. Okay, now where's our stop? Where's our conviction that the market is likely heading lower? Well, if we go back to the SPY again, we want to take a look at the volume profile, what we call a value area low. And in that situation, we want to be out of the market if we're breaking below this low here. This is what we call the value area lows. Okay, so this is basically our risk reward, and the market is giving you a chance here to add to positions. And if the market is going to continue, obviously if the market's going to continue going higher, but then manages to sell off here and bounce from this level, that's going to give you another chance to get in. So from that perspective, we could say that, if we break below this level here, you can get out. Or if you want to have a bigger or larger stop level, you can look at this 540 level, which corresponds to the value area low. So either you're out of the market here, or you're out of the market here. And that is why we are bullish at this point. Another thing to consider here on the Q is that we do have a MACD buy signal here. Now these levels here, the RSI that I'm using, the MACD that I'm using, it's a little bit tailored to my trading setup. So it's not the conventional settings that most people use. But either way, this market is looking bullish. We can also take a look at the IWM and see what the Russell 2000 is telling us. And as we can see here, we reacted just a tad below this 0.618 level. We are above the POC line, which is exactly what the SPY is showing us as well. And we're also finding buyers right at this 100% extension, which corresponds to wave C in this situation. So the same thing here with the Russell 2000. This entire move here, I mean this whole I would say a corrective process, because the way I look at this is that this is a corrective move. So it's an ABC basically. Now the Russell has been correcting since end of October 2023. This market has gone nowhere. And what I'm seeing here is that sellers are exhausted, super exhausted, especially for small caps. And so if we're seeing buyers here stepping up for the Russell 2000, this is going to be a year where small caps is going to outperform. And we all know that small caps tend to produce larger gains than their larger parts. So very interesting setup right here. And we can also move to the Dow Jones. Now the Dow is looking a little bit bearish. Reason being, again, just like the Qs, we are right below this POC line. So we want to get above this thing. But what we saw on Friday is that a lot of these stocks, these Mag 7s, especially Tesla, we saw a lot of bid coming into these stocks, almost all of them. So that could be a sign, an early sign, that the market is going to, or these larger stocks, these Mag 7s, are also going to help the push market higher. And on top of that, you also have the Russell 2000. So it could be a very, very strong move from these levels. Now I just need to double check here if we're having a, if we can see if this is a, let's find this level here. So this is almost the 100% extension. And the way I'm looking at this is an A move, and this is the B and C. So this would be a logical level here for the Dow Jones to also participate and finding support right here. Yeah, so this is the way I'm looking at the market. We are bullish at this point. I can define my risk reward, and the volume profile is telling me that just like the SPY and the Qs, we want to be long this market as long as we are above this value area low level here. And so we can also just glance at the weekly chart here. Let's see if we can move on to the weekly. Let's pull up the moving averages here. Now I don't use the 200 days and the 50 days. I use slightly different based on this Fibonacci sequence, which I think are more logical. I don't normally use the other moving averages. So as we can see here, the volume profile here on the weekly chart is also confirming a bullish setup here. Okay, so we are above on the weekly as well, and we can see where our risk reward is at this level. So we want to be long this market as long as we are above this value area low here. Also a strong reaction here from this Fibonacci level, and as you can see, we're also above, we close above this 55 EMA. The last time we were at the 55 EMA is when this almost here. Now that's actually the 89 EMA, but almost very near this level here, going back to October 23, 2023. So very strong reaction moves here. We're also very oversold, as you can see. And last time we were this oversold, you can see the reaction and how strong the market went up from this oversold move here. So we're seeing this setup here, and we want to be long this market. Obviously, we have been long with a few other stocks that have been outperforming, and we believe a lot of stocks that have been hit hard could catch a strong bid here, as long as we're staying above this value area low level. So that's how we're looking at the markets. We want to remain long here, and we believe the risk reward at these current levels are very, very good. So that was basically it from this video, and I hope you enjoyed it, and good luck next week, and I'll keep you guys updated. Have a good one.